Your next guest says you gotta put your inflation hat on because the signs are coming that inflation, after years of being nowhere, is finally there. Peter Boockvar is the Chief Investment Officer at Bleakley Advisory Group, and he is also a CNBC contributor, and he joins us now. I mean, Peter, good morning, by the way, and happy Monday. That producer price index number, I mean, it came in red hot the other day. The question, though, is that a sign of inflation or maybe just kind of a temporary surge because supply chains are so desperate to get raw materials, they're going to pay whatever it takes to get them there? You just wonder if it's going to stick around.
Well, you point to the main reason why I do believe we're going to see inflation going forward is because supply chains have been so disrupted. If you break out inflation stats, we have services inflation, we have goods inflation. Well, for the last couple of years, we've had pretty consistent services inflation driven by rents and medical costs. But we've always had this goods deflation as companies become more efficient in delivering products, technology products fall, and so on. But now, because of the supply chain disruptions, which I think will continue well.
All right, Peter, we need to get that signal back up. Maybe there's a storm, who knows, whatever it might be. Peter Boockvar, once we get you back on, maybe you can call in on the CNBC Newsline. Either way, apparently he is back. It takes 2 seconds these days to get things back up and running, Peter Boockvar. All right, so let's assume your inflation commentary is correct. After, by the way, you know, it's been a decade since we've been looking for any sniff of inflation. What do we do? Do we buy TIPS, Treasury inflation protected securities? Do we buy gold and silver? I mean, those have obviously been red hot with a bit of a cooling off at the end of last week. What do we do?
So I think that the commodity space has really been the bombed out space of the market, particularly energy, agriculture, industrial metals like copper. I even think that you could get a rally in bank stocks if you get a steepening of the yield curve. So I think that we have to start sort of changing our mindset on the markets to what has worked over the last 10 years to what may be shifting and may work over the next couple of years. And I think when we get a vaccine, which I'm optimistic that we are going to get in the latter part of this year, early part of next year, as great as that will be for our life, our health, our well-being, it could lead to a rush of demand that could overwhelm a lot of these supply chains that could trigger that higher inflation. So I think high PE stocks like the inflated technology stocks will be vulnerable. I think obviously fixed income and longer term interest rates will be vulnerable. I think investors need to start keeping their eye on the 30-year Treasury bond as it's sort of messaging on the market's expectations about growth and inflation, because the 10-year sort of has been neutered by the Fed with their talk about yield curve control with short-term rates being zero. I do think precious metals, as you mentioned, will continue to rally as we get deeper negative real yields and a weaker dollar.